what we do and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Hey, good afternoon. Welcome back. Today is Monday, 4th day of March, 2019. And like a lamb, out like a lion. You've heard that before. Hey, welcome to the show. Thanks for joining. Hope you had a great weekend. Hope you spent some quality time with your family. I saw you in church yesterday. Tip my hat as I do. Good to see you as always, and good to see you here. Thanks for joining. If you're returning, welcome back. If you're here for the first time, a special welcome to you. We are certainly glad to have you in our midst. Thanks for joining. I have a chart up of the S&P 500 Emini Futures. Today, it's a daily chart. If you can't see the daily chart, do go to our homepage at cfrn.net. On the right-hand side, click the big microphone, follow the instructions. You'll be registered in 30 seconds. You'll get an email every day reminding you the show starts at noon. And with one-click access, you'll join the show each and every day. If you're out of the office working from a cell phone, use this. youtube.com/CFRN/live. youtube.com/CFRN/live. Right. Yeah, it's a live simulcast each and every day of the show in real time. And thanks to the good folks at YouTube for carrying the show. Now, you may be wondering, why the daily chart today? What's going on? What's special? What's happening? Okay. This is a rare phenomenon, not seen a whole lot in the Emini Futures. Probably more apt to see it in equities, but here it is. And I would even go this far without having checked this or vetted it. I'm going to suggest that if you go back through history of the S&P 500 and you look for days that show what I'm about to show you right here, I think you'll find that it's almost always on a Monday. Like I said, I haven't checked it, haven't vetted it. But if you go back and look at the bullish engulfing patterns in the S&P 500 E-mini futures, number one, don't think you'll find a lot. I guess a lot's relative. But of the ones you do find, I'm going to suggest that the largest percentage of those happen on a Monday. If you want to know why, I'll tell you. If not, I won't bug you. All right? So, bullish engulfing. Now, what does that mean? I'm going to show you. Let me explain it to you. Better yet, I'll have my friend the internet explain it. Oh, by the way, if you get this not secure message when you go to the CFRN website, yeah, I know it's a pain. Trust me, the website is secure today as it ever has been since 2005. But we're caught in a death match between our domain name host, our site host, and our SSL provider. It's a crazy comedy of errors, and of which none of it's funny at all. But it's a situation with which I must deal today. Here we go. Is this it? The secret life of candles. Now, interesting that this was open to the bearish engulfing signal, because I know it sounds cheesy, but I haven't used this browser yet today. Okay, so what is a bearish engulfing signal? The information conveyed in this signal creates an extremely high probability that the buying is over. It also reveals an opportunity for establishing a good short position. Now, the bullish engulfing, which is the inverse polar opposite, a bullish engulfing signal is one of the major signals, as is the bearish. When the elements of a bullish engulfing signal are broken down, an investor or trader can clearly understand what was going on in investor sentiment to cause a reversal. 400 years of observations from Japanese rice traders have recognized the bullish engulfing signal and the bearish engulfing signal as a very high probability reversal signal. They're just the opposites of each other, bullish, bearish. Now, what makes it a bullish engulfing signal? Let me show you. It's not complicated. You'll see it once, you'll know it forever. Move that out of the way. And we can even blow this up like this. Okay. Now, this is where price closed on Friday. High of the day Friday was 28.08 and a quarter. The market closed Friday 28.07. Is that bullish? Yeah. I mean, is it most bullish when it closes on the exact high of the session? Yes. Pulling back that little dab, you know, a little dab would do you. in this type of volatility, and et cetera, et cetera. It's not unusual at all. Okay. So where did we open last night? Sunday night on Globex. We opened at 28.14. But wait a minute. We closed at 28.07. That means we gapped higher 7 points on the Globex Open last night. 7-point higher gap. Now what have we done? We've not only traded higher than Friday's high, we've now traded lower than Friday's low. And that is a bearish engulfing signal. Now, caveat. What if the market somehow, not expecting it, not anticipating, not prophesying or evangelizing, a late day reversal? I just know that it could happen, and that as a trader we have to be willing to embrace all possibilities. Okay? Now, if we somehow got this late day reversal and price did head up, if we trade above the low on Friday, some will say that's not a bearish engulfing candle now. And some would say it is. You know what? The high and the low are the same. Now, closing below, does that lend more credence to the bearish side? Now, remember, nothing is 100%. I know it's hard to sink your teeth into that, because in a world of rules and laws and all these other things, it just seems like there should be some concrete. No. It's like saying who or what your child's going to be before he grows up. And you're not allowed to force him into it. Right? I'm not saying this is a living, breathing thing, but then I'm not. So, above, below, Friday. Now, here's Friday, Thursday, Wednesday, Tuesday, Monday. If this thing trades a little bit lower, are we going to engulf the whole last week? Yeah. As if you believe in wicks, right? All right. So the pattern itself just has to do with the previous candle. But when you can look back across the horizon and see this, you're like, it's kind of a big deal, right? Okay. All right. So now that I have your attention, let's look at this. Let's put that in proper perspective. Now, we already have a swing trade out there in the channel to address this if we continue to fall. A lot of volume churning through because I'm locking up. We've already traded almost 1 million contracts today. Oh, hang on. Yep, 971,000. I want you to look at this also. Okay, this is the average true range. Now, I'm not sure where I've got it set because we changed it on Friday for something. So let me take a peek at the settings. The default look back period is 14. Okay, we got it set at 50 right now. No, that's not true. Okay, let's take another approach. Oh, we finally got it. All right. Okay. Windows set at 48. Why 48? Well, on a 30-minute chart, I figure there's 48 30-minute candles in a 24-hour day. even though the market shut down for an hour from 5 p.m. to 6 p.m. Eastern. But I digress. So instead of looking back 48 30-minute candles on a daily chart, you're looking back 48 days. What if we just trim that to a month? Okay. I'm going to have to scrunch this up for a minute. What I want you to see, and hopefully you will. Yeah, you will. All right. As price has climbed and got up into this area that we have talked about day after day after day, you know, do we put in another lower high? Okay, what's the high here? Let's see. Wow, a lot of volume churning through right now. We're gonna hit a million contracts here in a minute. All right. Okay, the high. I looked away. 28.19. Is that the deal? 28.19. It's the high over here. 28.1975. So I won't be able to come over here and go and another lower high, right? Because it took it out by what, 3 ticks? In the grand scheme of things, does that matter a lot? In this case, no, I don't see where it does. Okay. All right. As we climbed into this area, the average true range of a daily candle dropped from up here at 49.5 back in December, and into January we were still strong with the 50s. But here, let me open this. This is what I want you to see. Okay. Now, this is more of the typical, when people use the word divergence in regards to trading. Now, I think you know, if you've been around any length of time, you know that in the live training room and in regards to our slingshot indicator, our use of the term divergence is really quite different than the usage of other folks, groups, methodologies, etc. This is what classic divergence would look like. Price is rising, and this thing, this indicator, in this case, the indicator happens to be average true range, which is the average distance from the low of the day to the high of the day back in time, right? Okay, so what's been happening as we climb, look, we were way up here at 62, 65, 65 and a half. That's an average range of 65 and a half points on a daily candle. That doesn't even compute, does it? It really doesn't, because when's the last time you saw a 65-point S&P day? Where are we now? 29.6. All I want you to see is the slope. Don't worry about anything other than seeing this and seeing that, because in my opinion, humble as it may be, that lends credence to this bearish engulfing and to where the market may be taking us. And so now we'll address that. Okay, so we're going to grab our fib tool and grab this low, take it to the high. 27, 28, 18. 28,1975. Okay. Now we can put this back in place. Bullish engulfing. Okay. There we go. Where would we be if the phone didn't ring? So I turned it off, as I just did, out of courtesy and kindness to you, our valued listener. But then I forget to turn it back on. Miss a lot of calls. Tell the phone to remind you to turn it on. Yeah, see, it doesn't work if it's turned off. Sure, you get a pop-up, but that means you got to look at it. But I digress. All right, so here we sit. What all these lines mean. Fibonacci retracements. Nothing but math. There's no fundamentals in here. Really no technicals to speak of, although math being technical in and of itself. This is math based upon an experiment done with rabbits many hundreds of years ago. If you don't know Fibonacci, Google him up. And then if you want to learn Fibonacci, check in with me. It doesn't take a couple of years. It takes a couple of one-on-one mentoring sessions, and you should be good to go. All right. The shallowest retracement that we would look for on a daily chart going to be this BBC right here. Okay, that's going to hit at 27.55. You know, that brings up a good point. I think I'm going to adjust the entry on the swing trade. Now, that's just a pullback to the BBC. Since we had this bullish cross, we've not had a pullback to the BBC. And after the bearish cross, okay, look what happened on those last two moves. We got head fakes to the upside. See that? See that? Bullish cross that went nowhere. It was just part of the pullback and the next leg. Pullback, next leg. Which took us all the way down into Christmas Eve. And then the day after Christmas, off we go. All right. So if price pulls back to the shallowest Fibonacci retracement, 24%. Now to put things in perspective, let me just remind you that from here to here, from the high to the low to the retracement high, that right there is a 62% Fibonacci retracement. From there, from the high to the low, the market retraced 62%. Okay. Now, what we're talking about over here is the potential of a mere 24% Fibonacci retracement. Takes us down to 2,700. Okay. Is that substantially below us right now? Yes. Yes, it is. However, as I said, that's the shallowest Fibonacci retracement. If we did a 38, now that's still not a 50, still not a 62. But look at this low, this low, this low, this low, and the 38. So where is the 38? 2630. So does that put us about 2770? Is that 140 points below? Yep. Remember last week we were talking about it, that same number, it was 160 below? Does that mean we've already fell 20? Well, that's how we got this bullish engulfing. Now, keep in mind, it's the fact that the market leapt higher on the open last night. 7 points. Gap and run. But how far did it run? All right, let's back out of here. No, let's go here. And we'll make this chart talk to us. Oh, well, that's nicely. Okay, these are last week's weekly trading zones. Now, because we ended up so close last week to where we began the week and we stayed stuck in that sticky place, we've got another rare occurrence along with the bearish engulfing, and that's that a number of our weekly trading zones this week were the same as last week. Hope you jotted them down. Now, or I guess you still can, right? There's the gap higher open. So we're waiting all that time. 30-minute candles for price to close the gap. Finally did. Now, right there, this was the opening Wall Street candle. Right there. See the doji? Doji at a weekly trading zone. What could that mean? Well, this is what it turned into. It was followed up by another 30-minute doji. And we've now dropped from 28.14 to 27.75. So that's 25, 35. So we've dropped 39 S&P points so far. Yeah. Now, where should we look for support? Did we hit that area? We did. And spiked it. Okay. Very good. Now here's the Dow on the daily. Now if we blow that up, now you see, yep, bullish engulfing here as well. Not surprising. The Dow and the S&P have a pretty close relationship. Alright, let's take a look at the numbers. From around the world, I got a little bit of news, but I've said too much already. Alright, cash markets. Starting here in the US. The Dow is currently down 317 points. That's a little over 1%. NASDAQ down 73, basically 1%. S&P 500 down 27 points. That's also 1%. And the Russell 2000 down 21 points. That's over 1.25%. In the commodity basket, crude oil has actually gained 26 cents today, trading at 56.06 last. Gold down another $9.50, trading 12.89.70 last. In the Asian markets, at the closing bell, not sure if they have a bell, they probably got a gong. The Nikkei up 219 points, 1%. Shanghai up 33, that's 1% for the Shanghai. And the Hang Seng up 147 points at the close. In European markets, the FTSE finished the session up 27 points. The DAX was down 9 and the CAC up 21. No movers or shakers in the European markets. Pretty quiet trade. That makes it a green day in Asia, a mixed day in Europe, and here at home, it's a big red Radio Monday. Let's go to Michael and get a recap of everything that happened to the live training room today. Michael, take it away.
Okay, I got it. It was not a big day in the room today. It was not at all. But we did what we could with what we had. Alright, let's see. You guys should be looking at my charts. You are looking at my charts. We'll come here first, okay? And I will tell you how to do this, but sadly, if I click on that, yeah. Okay, here we go. Good afternoon, everybody. Today is Monday, the 4th day of March 2019. If you have not taken a free trial with us and you want to take a free trial with us, right now you're going to have to email us. Email us at support@cfrn.net and just put free trial in the header and we'll send you all the information you need. Okay. Yeah. Sorry, my phone's going off. And we'll send you all the information you need, okay, to take the free trial. To get in there into the room with us and watch us do what we do with the indicator set. When we send you the information, there's going to be an invitation to download the software, to download the DT Pro software. You should absolutely take advantage of that, okay? The trial is not all-encompassing unless you download that software. You really got to download it. Okay? I mean, I know a lot of people don't, but you really should. Okay? All right. So, back here. I'm going to do the spreadsheet. This spreadsheet goes back over 6 years now. Over 6 years. To January 2nd, 2013. Okay. Today, as I said, is the 4th day of March 2019. If you're going to read the spreadsheet, you can read all the CFTC risk disclosures down at the bottom. Today we made 8 ticks in the euro, 6 ticks in gold, and we lost 8 ticks on the ES. And that put us plus 10 on the morning. I know, not a big game. It took us 7 trades to get there, but nevertheless, we got there. So on the month now, we're up to 2250, averaging 111 a day. On the year, we're up 4,321. That's over 39 days, averaging 110 per day. Okay. Okay. All right. So let's go in and show you what we did or didn't do. Okay, this morning, the market started out, gold was in a downtrend this morning when it started out, but it was pushing in new lows, so we couldn't take these trades. But we couldn't take these trades because it was pushing in new lows. We get over here now, and we have a bounce off the BBC right here. We took that, and we ended up with plus 1 tick, I think, on that, right? Yeah, plus 1 tick. And then it chopped and chopped and chopped and started going up. And once it started going up and established a new high, yeah, we were trending then. So then we said, okay, we're going to jump in again. And we did. We had a close above the trend line right here. And we picked up 5 ticks right there. That put us at plus 6 on gold. Since then, there was a long trade here and a long trade here. There were 2 more trades during the break where you could have gotten into it and gotten some profit out of it. Okay, that was the gold today. Now the euro. Let's see, the euro. We started out here with the euro. We went short on a close down below this trend line, and it almost stopped us out. But then we ended up going down. We picked up 4 ticks on that. We missed this short over here, which probably would have been a break even for me. Okay, I mean, it did go down, but it probably would have been a break even for me. But we missed that one. Over here, we picked up another 4 ticks on a close above the trend line. And during the break, it was really quiet right here during the break. And it just took off at 11:40. Yeah, well, it started to move. It took a half an hour to do this whole leg up. But there were no trade setups in there. Okay, so we ended plus 8 on the euro. And on the gold, we ended plus 6. On the euro, ended plus 8. And now crude oil. Ew. Okay. On the crude, starting out right here, I mean, it had some movement in the pre-market. Oh, all the markets had some movement in the pre-market, for that matter. But okay. I was just looking at the question box. Dwayne's answering those. Okay, so we missed that trade right there, and we took this short right here, stopped us out. Then it got really choppy. I mean, just look at that choppiness. Here we put in a lower swing, so we had lower highs and lower lows. We were waiting for an opportunity. We finally got one off the BBC right here, and we picked up 8 ticks. So over here we were minus 8 ticks. Over here we were plus 8 ticks. So we ended with 0 on the crude. Then you see how flat and choppy it got as we approached the end of the room. After the room closed, there was a bounce off the BBC right there. Okay, and it made this big move down, and that was a quick move. It was like a minute. It made that move down. Then it got really choppy again, and there really was nothing else after that. Okay. And on the ES, let's see what we have here on the ES. Wow. Yeah, the ES had a lot of movement during the break. Okay, we had just the one trade here on the ES, and we stopped out. There was another one here that we missed. That would have worked out just fine. And then all this movement during the break. You see that? All that during the break, putting in new lows. It's hard to tell because it was putting in new lows as it was making those movements. Okay. But all right. All right, so with that, let's bring this back up. We'll look at the spreadsheet one more time. Again, if you're going to read the spreadsheet, you can read all the CFTC risk disclosures down at the bottom. Today is the 4th day of March 2019. We made 8 ticks in the euro, 6 ticks in gold, and we lost 8 ticks on the ES. That put us at plus 10 on the morning session. Took 7 trades to do it. So on the month now, we're at 222.5. That's over 2 days, averaging at $111 per day. And on the year, we're at $4,321. That's over 39 days, averaging $110 per day. Now that is one contract, 2 hours per day. If you added one contract per month, let me make sure that that's right. No, that's not right. This would be 3. If you added one contract per month, you'd be at this point, $6,833. Yeah, well, added one contract and did everything exactly the same as I did. Okay, now, if you have not taken a free trial, go to the home page. Actually, if you have not taken a free trial, email us at support@cfrn.net and just put free trial in the header. Okay, if you've not taken a free trial, email us at support@cfrn.net. Okay. All right. And with that, we can pass it back out to fabulous Phoenix, Arizona, Studio A, overlooking South Mountain, America's largest city park. Dwayne,
Here's
you are
ready. All right.
Picnic basket.
Here we go. Recap of the recap.
Today we had a yellow day today. We didn't get the goal for the day. We took 7 trades and we ended up positive just a little bit.
Hey Gary, did you see my answer for you? Gary asked the question. I said if somebody asked, I'd give you the answer. Gary said, why Monday? Why would I say that bearish engulfing candles don't happen a lot in Emini Futures? When they do, if you go back in history, I think you'll find that the majority of them that have happened on a Monday, and that's because you don't get that many gap higher opens or gap lower opens in futures. When you do, sometimes you get a small one in earnings season, yeah, but one of any magnitude at all, it almost always comes on a Sunday night, just as we saw last night. Market closed very bullish on Friday, just a point and a bit of shade off of the high of the session, And so they were chomping at the bit last night. Boom. Gap and go. Now where'd the gap and go go? It went, once again. Now, this is 2 Sunday nights in a row that we've seen the first 30 minutes explode to the upside. I mean, right out of the gate. Boom. And then turn back down. If we just scoot back to last Sunday night, same thing. We gapped, and in that 30 minutes we put in the early high for the high for the session. Back to the BBC and go. Gap, put in the high in the first 30-minute candle, pull back to the BBC, but this time something different happened. Okay, let's go back and look at that one more time. See this? I want you to take a look at this. Okay, and you see right here where this turns back up. Runs right through here. See that? Okay, now let's come over here and look at this. You see how that just got pinched down? Just pinched it down, pinched it down, pinched it down. Red and falling. And then we pulled back up to that zone. We gapped to the zone. Got below, got above it, came back to it, got below it. How much below? All the way down to 2809.5. And then back to the zone, doji, doji, and edge. That's a long-legged doji. Some might refer to it as a hanging man. Typically a hanging man has a very small body. So hanging man is the reverse of a hammer. If you go to the Secret Life of Candles, you'll find the 10 most frequent candlestick signals. And this isn't the latest thing down the pike. I mean, Japanese rice traders, hundreds of years ago, sorted this all out. And while there are probably 200 different candlestick signals that have been documented and recorded, there's really, in ordinary day-to-day life, you're going to see 10, roughly. And of the 10, you're going to see, 4 or 5 quite a bit, and the other 4 or 5 not so often, like this bearish engulfing. Now, equities, you'll see it more. It's just the nature of futures, because futures don't have that long period where they're shut down. Equities stop at 4. Yeah, there's some after hours trade. It never got very popular, never really took off. I know some people do it, and that's okay. So they can deal with earnings and that kind of thing. And then there's nothing until the next morning at 9:30 a.m. Eastern. Not so with futures. Once futures open at 6 p.m. Eastern on Sunday night, it's go until 5 p.m. Eastern Friday afternoon. The exception of 1 hour each day, the market closes down from 5 p.m. Eastern to 6 p.m. Eastern. And there's a little 15-minute window there right after when futures initially close. That's at 4:15 to 4:30. Why they reopen for that 30? I don't know. Does much ever happen? Not much. So there we go. All right. Makes sense? Good. Gary said it makes sense.
John's in the audience, doing.
Okay. Go ahead and open him up.
Okay. He's open.
All right, John. Welcome to the show.
John is in the audience, and his mic is open.
Now I'll ring his phone.
Well, okay. He's in Mexico, right?
Texas.
Texas?
Yep.
Oh, I thought it was in Mexico.
We're ready for you, John. Yeah, no problem. All right, he'll be here in 10 minutes. Okay.
Okay.
Yeah, you can just leave his mic open. He's got it on mute on his end.
Okay.
That'd be all right. And he can just talk when he gets here.
V. me respond to that.
All right. Say one last look at this daily chart of the S&P 500 E-mini Futures. We don't have a bearish cross yet. We have a bearish engulfing. But just look back over these daily candles here. And if anybody spots a bearish or bullish engulfing, point it out. We could argue this is one right here that engulfs that candle. Gotta sit and study this a little bit, but no doubt you'll find some mixed in there, but then you'll also kind of start to get the picture that, yeah, this doesn't happen a lot, does it? No, it doesn't. Okay, now let's jump over to, let's go to the ES. You know what, I'm going to clean this chart up. It's 2791/92, which was an important area last week, which was a weekly trading zone 2 weeks ago, finds itself back in the limelight again this week as a weekly trading zone. Happens. When I complete the zones and then I compare them to the previous week zones, no one's more surprised than myself when I see zones repeat, but they do occasionally. It's not unusual to have one repeat, but to have two or more repeat tells you that this is an area where there's a lot of important prices, important areas, and the potential for us to be stuck there for some time. That could happen. It really could. So I'm just going to take out all this. And let me get rid of this. And this. And we're going to do the scrunch. Okay. Now, what's this all about? That's what it's all about. Last time the market tried to trade lower, we had a bearish cross here, and a leg, and a retracement, a leg, a retracement. Couldn't put in another leg. Could not do one more leg. Buyers came in, lifted the market. Bullish cross, leg, and a retracement, a leg, and a retracement. Leg, see that gap? Retracements, leg. Bearish cross. Down we go. Now that was the yesterday a week ago, Sunday a week ago, that was the Globex open right there. We ran up off of that gap higher open after we filled the gap. Ran up and tagged the weekly zone, I think to the tick. Bearish cross. Across two zones, found support, resistance, support, resistance, support, resistance, support. This time we make it through, pull back all the way to the zone, and that sort of slingshotted us up into the stratosphere. Put in a higher high. Then look at today. All right, the die is cast, as they say. Now, what we're going to anticipate is price will at some point stage a little rally, okay? Maybe into this area right here, this 87, 88 area. Is that you, John?
No, that's me.
All right.
I don't hear John yet.
Pull back to the BBC, and then a continuation of the leg down. Remember, the shallowest puts us at 27.55-ish. Okay, that's the shallowest. And then the 24 takes us down basically to 2700. If we close today where we are or lower, then the hook is really in for this bearish engulfing. These don't fail too very often. So Again, go back through history and take a look at them. Okay. All right. So on the ES last night, Concierge Trade Alert. And Tim, I don't know if you're tuned into the radio program or not, but if you can, use the chat box in the radio, because it's a little difficult for me to swing over, but I can still answer your question. Hang on. I gotta find
Was there an email that came through, Dwayne?
No, he sent a message on Telegram.
Oh, okay. On Telegram.
In the discussion group.
All right, let me go check that out.
No, I got it. I got it. The question is regarding the ES swing trade. Is the stop rule the same as other trade alerts? No. No, it's not, because it's a bigger picture type trade. And that's why I put a note in there last night, which you may have missed because it was early on. I said, if and when the... even when it triggers. No, actually, I said that on the copper trade, but it holds true for this one as well. And the copper triggered, by the way, so we need to go in there and address that. When this triggers, I will take a look at the chart, and we will offer some guideline. Okay. Now, the initial leg, it's only a 20-point drop. And here, let's go back over here. It doesn't even take us to the 24. In fact, there's another 30 points on the other side of that. And remember, this is the shallowest fib. But remember that we haven't pulled back to the BBC since this bullish cross. So is it possible that a pullback to the BBC this time is enough to get us just a little bit higher? Maybe, perhaps. The chart will tell us, it'll show us. Good climbing. Keep an eye on it. All right, back to the ES. Or back to the 30-minute chart. Last night, hang on, let me find it. Okay, Concierge Trade Alert. We said to consider being long 28.20. If you want to take a screenshot of this, I'll drag it up so that anyone who wants to can. Okay. 5, 4, 3, 2, 1. Okay. Now, swing high, 28.1975. $28.20. All right. Now, consider being short, 27.95. Which is right there, 27.95. Now we've already dropped below 75, working on 65, but from 95 to 75, that's a 20-point drop. Do we have an exit signal? Not even close. We're not even in a position to create an exit signal. Even though this is an extended move, look at how quickly it happened. All of the bulk of it happened in 90 minutes or less. What was important is that we took out this swing low just right through it. Now, again, these are last week's weekly trading zones, of which some are the same as this week's weekly trading zones. Okay. So again, if we do find the support here that this area offers, a bounce up to the BBC where we roll over and then attempt to put in a lower low. This would be just the beginning of the move. Let's dial it back here for a minute to December 26th. I don't know if I can get that date or not. Turns out I can. All right, December 26th. All right, there's the 21st. We put in the lows on Christmas Eve. Oh, Santa, wherefore art thou? All right, and then we come back after Christmas on the 26th. Giddy up, bullish cross, and then here we go. Now, watch this. Now, that bullish cross took place at 23.45. See that little red candle? Look at the horizontal line on my cursor. See how price came back to test that? Right where the bullish cross was? Okay. So from, call it 23.50. 23.50. Here's 2,500. We dip back to 24.40, but not 23.50. And then we go again. Now this is a 30-minute chart, but notice bullish cross, higher prices. Bearish cross, lower prices. Are there head fakes? Yeah, I just showed you a couple. Boing, boing, boing. All right, which brings us to where we sit right now. So a bounce back up to either this 87.86, 87.88, or this 99.800 from last week. From 95 down to 75. We'll just call that 20 points for now. That's what the market made available with no exit signal in sight. $50 a point, that's $1,000 per contract traded. That's at 75. And the long side failed to trigger by one tick. So now let's look at the Dow. Put that on a 30-minute. Now here, let me run through this real quick before I put that on a 30-minute. NQ. Bullish engulfing. Bullish engulfing. So all four indices. Okay, dial this down to a 30-minute. Okay. All right, last night's Concierge Trade Alert on the Dow, consider being long, 26,180. Swing high, 26,171. No trigger. On the short side, consider being short, 25,995. $5,995. There we go. 25995. And we've printed 25620. It's 170. No. I digress. Hang on. I have a calculator for such a time as this. 25995 minus 25620. It's 375 Dow points. At $5 per point, which is what the Dow pays, 275 times 5, $1,875 per contract. That's what the market made available. Now what you or anyone else might have taken out of it is entirely between the trader and his stop loss. Is there an exit signal yet? Nope. Gonna look a lot like the S&P. This has matured a little bit more. But see, to get an exit signal, the step line has to cross the CFMA1 and then close above it. A green candle close above the step line once it crosses. So you can kind of see how far away we are from that happening. So if this starts to march sideways, it'll cross, and that will set us up for the bounce back to the BBC, which these lows, that would be a pretty good place for it to come in. Is there a zone there this week? Funny you should ask. There is one in that neighborhood. Okay. Russell. Alright. On the Russell, last night's Concierge Trade Alert, consider being long 15.99. Swing high. Oh, 15.98. So, no false trigger to the upside. But on the downside, 15.82. Consider being short 15.82. If you're not studying the Concierge Trade Alerts when they come in at night, I mean, really taking a good look and see, because remember, that is a static report, good for the entire session. 15.82. And that's going to give us about 18 Russell points. From 82 down to almost 62 would be 20, so yeah, we'll call it 17 conservatively. In Q, consider buying 72.11. Swing high was 72.11.50. This time it triggered by 2 ticks. 2, right? Quickly reversed. The sell side, 71.32. Alright, 71.32 down to 70.80. And swing low, so we'll call it 52. We'll call it 50. At $20 a point, that's $1,000 per contract available. PCA, per contract available. That's what the market made available. It's not how much you took out of it. Only you and your stop loss know that. Right? Exit signal? Not yet. Still falling. What about Crude? What has Crude done for you today? All right. We had last night a little move to the downside, which worked out. That was a logic 247. And then on the Concierge Trade Alerts, I've been waiting for Crude to kind of join up with the indices, and it looks like it's on its way to do that, which, if I remember correctly, that will trigger in the daily double. All right, Crude, we said to consider buying 56.65. So 56.65 took us up to 57.03. So that's a $350 per contract move. From 56.65 up to 57. And then on the short side, consider selling crude at 55.90, which we're just approaching here. Oh, we already approached it here. In fact, we put in a low of 55.81. First time down, stopped out. Second time down, then on the up move, $350 per contract available. And then here, we're about to trigger again. Okay. When you have a trigger that goes nowhere, really have your wits about you as we approach the second trigger. Okay. Is there less risk? Is there more profit potential? It's a question to ask yourself. If you don't know how to answer the question that you just asked yourself, book a mentoring session and I'll help you with that. Okay. All right. What do we got left? Crude? No, I mean gold. Yeah. All right. So here's Friday. Here, let's shrink this up a minute. So we get a bearish cross on Thursday at 10 a.m. Eastern on gold. And we have been below the BBC with the exception of this little guy right here. All the way down. Now, in order for price to start heading back up, guess what will have to happen first? A bullish cross. That's right. Oh, so I'll know it's going back up. You know there's a bullish cross. And whatever's in your rearview mirror, that's what you should expect or anticipate until proven otherwise. Because that's what the chart's telling you. That's what it's showing you. The indicators don't predict what's going to happen. They highlight what is happening. Now, you can learn to forward think, and that's how you arrive at your highest probability thing that the market will do next. Not the thing you want it to do, or what the talking heads on TV say it should do, but what it actually does. Okay? Huge difference. I'm starting to think that traders need a pet. Because in my research, I keep hearing this recurring thing. Now, this is not something I went looking for, investigating, searching, but it's come back to me now a couple different ways from unexpected directions, said by people who don't even know anything about the other person that said it. It's completely, almost a different context, but it really is the same thing. And that is, pets keep you present. Pets, dogs, cats. I don't know about turtles and snakes, maybe. Pets keep you present. Pets keep you in the here and now. I know it sounds far-fetched, new age, woo, play the harp. Okay.
Between you and I, how many pets do we have?
Yeah, well, I'm present. Well, what they mean is a dog in your face. You know, one out in the yard or in the kennel, that doesn't really keep you present. But when one jumps in your lap, I mean, how many times have you just been sitting there minding your own business and somebody's dog jumps in your lap and boom, you snap to the present. You were a million miles away solving the world's problems, you and Ocasio Ortez, and bang, all of a sudden you're in the here and now. It doesn't always have to be them jumping in your lap. They could lick your face. They could just come up and sit down. And you come back from wherever you were, and for a moment, until your mind takes off again, you're present. A trader needs to be present. Right here, right now. Not running the numbers on what could happen and would happen. I mean, those are things that have to be done. But when there's something happening right now, that deserves your undivided attention. And so whether it's a a cockapoo on your desktop. I don't know. Whatever it takes for you to stay right here, right now. It's very important. Whoa, Luke Perry passed away at 52. Alexa, what's the Luke Perry story?
A publicist for Luke Perry says the Riverdale in 90,210 star has died. Publicist Arnold Robinson said that Perry died Monday after suffering a massive stroke. Robinson says Perry's family and friends were with him
52,
when he died.
that's very young for a
He had been
stroke.
hospitalized since last week. He was 52.
He was on Riverdale, he was on 90210. I think that's where he made it.
You're older than me.
I'm sorry?
I
I'm
said
not
that's a
quite
year
sure
older
how to
than me.
help you with that.
Alexa, go home. All right. Okay, back to where we were. Gold. All right, last night on gold, this 30-minute chart. Consider selling 1288. And we spiked down to, I'll call it 1284. So that's a $400 per contract move. It did it, it's done it once, and it looks like it's getting ready to do it again. Okay. Now this one, because it actually ran 4 points or $400 per contract, not unreasonable to expect at least a $200 move out of this one, right? Potentially more. Lower risk, greater profit potential. Keep an eye on it. Okay, soybeans, and bonds, and then we're done. John, we're gonna bid you adieu here in a minute, so pop on if you want to come on. Oh, that's not right. ZS. K9. All right. Soybeans. Consider being long 919. There we go. 919, we put in a high at 924. Call it 5 points, $50 per point, just like the S&P. There you have it. All right, let's take this out. Let's go bonds. Okay. On bonds, consider buying 1 of 44.23, which is right 144.23 right there. 31.25 per tick. 32 ticks to a point. A 1 point move is $1,000 per contract. So from 144.23 to 145.23. That looks like a fair distance, but for bonds it really isn't. It's just because I've got it scaled a little big. There we go. So $200-$300 moves so far. We'll see what else materializes. Yeah, Karen, it is very sad. I just happened to spot that on the screen of the Alexa. I had no idea. Yeah, at that age. In a time when people are living to be older and older, our longevity seems to be increasing. In part, I think, due to a lot of things. People are more concerned with their diet, more concerned with exercise. There's been leaps and bounds in the medical field. Fewer people are smoking, so it's all good. Oh, that's too bad. Karen says that he also has young children. Yeah, that's a real shame. I wonder if there's more to the story. Not that it matters, but there usually is. Okay, so that does it for the Concierge Trade Alerts. If, in fact, you did not grab a screenshot the first time around, go ahead, jot them down. The numbers remain valid until the next set of trade alerts come out. Okay. Now, as I was saying earlier, if you don't watch the Concierge Trade Alerts, you should, because it's a static report, good for the entire session. Okay. Now, when the buy side triggers, occasionally we get two-sided action. But for the most part, when the buy side triggers, that's an indication that any trades you put on at that point and moving forward, as long as you're north of that number, should be long trades. If we trigger on the south side, then at that point, and any additional trades that you might put on after that, short. Okay? All right. Hope that helps. Let's go back, take a look at the ES. Here we are on the daily. Okay, so our bullish engulfing potential still intact. Don't foresee it changing, but finding support at this area. Now that little rectangle's in there from last week, but we found support, we bounced. Again, we're looking for a move up too. Now the BBC, as we roll sideways, the BBC will come down to meet price. Price rises to meet the BBC. And once they come together, that's where we look for the beginning of the next leg down. We don't just park an order there and hope we get a cookie, as they say. We actually wait for it to get there and then wait for it to show signs that it is actually moving down. See, that's what's happening now. And that's when we want to participate, not ahead of time. When I send an alert out, that's basically giving you the heads up. Hey, when this comes together here, pay attention. All right. Enough of that. Good word for the day. Let's do it. John, this is your last call. If you can make it, we'd love to see you. If you can't, fully understand. It happens. Stand by. The God Factor. Hey, how many of you watch the sophomoric God Friended Me on Sunday nights? Well, I do, and I thoroughly enjoy it. I almost get a little teary-eyed at the end of every episode. That's a good TV show. There's not a lot of good TV shows like that anymore. It doesn't hurt anybody. It's not sexist. They're not taking drugs. I mean, I let my children watch it. Okay. 1 Corinthians 3:9 says we are laborers together with God. The biggest plus factor that you can have on your job is the God factor. Paul writes, we are laborers together with God. I want you to consider these three powerful words, together with God. A surgeon in a large city hospital had a habit of insisting on a few minutes alone before he performed an operation. He had an outstanding reputation, and one of the young doctors who worked with him wondered if there might be a correlation between his habit of spending time alone and the doctor's success. He asked the surgeon about it, and the surgeon said, yes, before each operation I asked the great physician to guide my hands in their work. There have been times when I didn't know what to do next in the middle of a surgery, and then came the power to go on. Power I knew came from God. I would not think of performing an operation without asking His help. The surgeon's words quickly spread through the hospital and then across the country. One day a father brought his daughter to the hospital, insisting that the only doctor he would allow to touch her was the one who worked with God. Whoa. I want to be that guy, except I'm not a doctor, but in whatever I do, I want to be known as the one who works with God. It almost seems like an unfair advantage, doesn't it? But it's an unfair advantage that you have access to right here, right now. The Bible says in Proverbs 3, 5, and 6. Trust in the Lord with all of your heart, and lean not on your own understanding. In all ways acknowledge him, and he shall direct your path. So my job's to follow the path, and if he will actually step in and direct my path, that does seem almost unfair, doesn't it? The good news is we all have access to it. Now, in that scripture, it doesn't say don't use your understanding. It says don't lean on it. Lean on God. He's the one. I know I can trust him infinitely more than I can even trust myself. Hands down, no doubt about it. Acknowledge him, and he shall direct your paths. If you want success on the job, this is a proven formula that works. And that's our good word for the day. Hey, thanks for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.